And from top calls to stock of the hour because department store chain Kohl's headed to its worst day ever despite taking itself off the market even after several indications of interest. Bloomberg's Ritika Gupta joins us now. Ritika, what is going on with this takeover?
Yeah, well, Kohl's is just removing that for sale sign now completely, at least for now. It just couldn't agree with that franchise group for that potentially $8 billion deal. Earlier this week, they actually lowered their offers to $53 a share from $60 a share. And if you just think back to the beginning of this year, you mentioned it, there was just a flurry of interest in this company. You got offers from Starboard, Simon Properties. Now, none of these deals came through, but if you can look at the timeline, you can see that on the board there, the offer prices just got lower and lower. And this lower offers that you're seeing really reflects the market volatility right now. It is not a good time to be a retailer, even on the M&A and the credit side of things. With interest rates going higher and higher, that's it's going to be quite challenging to get that financing as well. So the analysts weren't so surprised about this, given the market volatility, but you can see investors clearly disappointed today with that big drop in the stock. And
what does it really say, Ritika? Because on one hand, you're talking about market volatility, but that assumes that, okay, you don't want to sell for a price that's lower than what you're worth, but then how do you make sure in the public market you are still worth more, as you saw in the stock reaction today?
And I think that's the very difficult question, and it's difficult for management. The analysts were actually saying that they also didn't think this deal would go through because management just didn't want to sell it, and it is lower prices that you're seeing. But it does kind of beg the question of where you go from here, I think, for retailers. Like, is the environment actually going to get much better? Because you look at the fundamentals, they've already slashed their profit and sales outlook for the rest of the year. So it looks quite bleak. They're facing higher costs, lower consumer demand.
Ritika, thank you so much. That's Bloomberg's Ritika Gupta with the stock of the hour.